So what is capital gain? So first of all, there is a lot of misconfusion or uh, there is a thinking about this like capital gain calculation is difficult or it's very hard to understand. There is a lot of calculation involved. There is too much taxes going on, right? So first of all, I want to make you comfortable that this is not very hard or rocket science. It's very easy. Rather, I would suggest it's easier once you understand it. But if you don't understand it, you will always feel it's complicated, right? For yourself also, for your clients also. Okay. So I will try to put in as easy as words and let's go. So capital gain means there are basically CRA defines there is two type of activity. One is a routine activity that CRA defines as a day-to-day business operations. Okay. And there is a once in a lifetime opportunity kind of things. Once in a 3 years, 2 years kind of thing, 2 to 3 years. That is usually called capital events. So when we talk about CRA, they define routine activity as a business activity because they want to tax it separately. Capital gain is taxed favorably towards the taxpayer. Okay. So for example, let's say I'm doing accounting business. This is my routine business. So CRA tax me as per my slab rate. But when I sell my house, I'm living at Cambridge. I sell my house after 2 3 years. It's not a routine thing I'm doing. It's a one-time life event I'm doing. Maybe for my marriage, maybe for my moving out, whatever the purpose, right? So then government wants to treat this as a favorable event for me. So they tax as a capital gain. Why? Because it's a one-time event in my life. But imagine if your client is a builder whose work is to sell the house all the time. Then for him it will be business income. Everyone getting? What is the
Yeah.
difference between business and capital? If I'm doing routine things, it's my business income. If I'm doing once in a while, that is my capital event. So, for example, selling a house for me would be capital event. Selling a house for a builder is a business event. They do day to day. Okay. Now, when we talk about capital gain, it doesn't include just a house. Like mainly we think it's house, but it could be anything practically. It could be your gold, it could be your investments, right? A lot of things. So whatever you hold, because see, let's say I buy Tesla stock right now, I'm not going to sell it often, like very time. It's my not my day-to-day activity. But if you are a trader, that's your day-to-day activity. Then it would be business activity for you, and it will be taxed as slab rate. Everyone getting? If it is my day-to-day activity, it's a business activity. I have to tax as per T2125. If it is a once in a while I do these things, then it's a capital event. It's taxed at a capital gain. Okay. Now, how do we calculate capital gain? Very simple formula. I'm just taking example of the house. Okay, house is simple example. Let's say I bought a property. So first of all, we need to have a purchase price. Let's say I bought the property for 700,000. Okay, in Mississauga. Now, while buying, there would be land transfer fee, there would be lawyer fee, there would be miscellaneous charges, there might be some hydro adjustment, whatever. Okay, to buy. Okay, let's say it's a 2% closing cost. You can say actually closing cost is the better word. Okay, 2%. So what is my net effective purchase price? Net purchase price is 714,000. Okay. Now let's say I did the some renovation in this property. Let's say basement was unfinished. I make it finished by spending $50,000. Okay. Now whatever is the renovation cost, if we add this, this is called adjusted cost base. Whatever is my purchase cost plus whatever I do the renovation. Now this renovation has to be a capital nature, which means if I just change a simple light bulb, it's a recurring activity. It doesn't count. It should be a substantial renovation. Okay, renovation to the property. This is my adjusted cost base. Adjusted cost base is arrived at purchase price plus whatever the major substantial renovation. And then we have a selling price. Let's say I sell this house for $1 million. $1 million. Then there is a capital gain of how much this minus this. Everyone clear?
Yeah.
Okay, very good. So this is capital gain. Now there could be a capital loss also, 100%. Let me just make a new example here. the same price, but you are able to sell for only 500,000, for example, then you might have a capital loss. Okay. Now, this is a capital gain. This is a capital loss. Now, how this tax, there is one more layer to the individual. Is this my primary home or not? There's a biggest question. If this is my primary home, the full capital gain exempt. Okay. If this is, yes, fully exempt, which means whatever money I make, I don't have to pay any taxes on this amount. Okay. I have to fill the forms and everything. I will show you how. But this is completely tax free for me. If it is my primary home for all the years, very important. Let's say I bought the house in 2018. I did the renovation in 2020 and I'm selling in 2026, for example. If I own this house across all the years as a primary home that I did not rent it, I did not use for any other purpose, then it's a fully exempt. This gain fully exempt. Okay, this is called as principal residency exemption. Because as I said, government wants to favor you because this is your primary home and this is a once in a lifetime kind of event. Once in a, not a lifetime, once in a while event. Okay. Now imagine this same scenario. If you purchased the house, you did the renovation in same year, you sold it for the loss, but this is your primary home. Then there is a bad news. You are not able to claim this loss. Why? Because when you gain money, government did not tax you. So same vice versa applies. Okay. So then you cannot claim this. Okay. Forget it. It's gone. Because this is also principal residency exemption technically. Okay. Okay. Let me repeat again. So let's say we are talking about house. Okay. I purchased a house in 2018. There is a year. We purchased for 700,000. When we buy the house, we did some extra expenses, lawyer fee, land transfer fee, whatever. Total expense for me to buy this house is 714,000. Okay. After some time, after 2 years, I did some renovation in the house. $50,000 I spent extra. So my total cost to own this house is actually how much? 714 plus 50,000.
Yes, sir.
Okay.
Yeah.
So 764,000 is my adjusted cost base. This is a tax language. This one. Okay. And let's say I sell this house for $1 million. Okay. So then how much is the capital gain? How much money I make on this one? So I make this minus this, 236,000.
Okay.
Clear? Bhavna ji, Ruti ji?
Yes.
Okay. Now there could be
Yes.
a reverse scenario also. I could make a loss also because my purchase price and cost is same. But if I sell this house for a lesser price, I will make a loss. Correct? And why we call it as a capital gain or capital loss? Because it's a once in a while event. But if I'm a builder, I'm a I do like this house trading every 6 months, then this won't be capital gain for me. This would be my business income. Okay. Because I'm selling once in a while, I am calling it a capital gain or capital loss. Now, in Canada, there is a favorable treatment, even one more layer ahead. If I live in this house as a primary house from 2018 to 2025, all the years I own this house, I'm living here personally, then this full gain is exempt. This is called principal residency exemptions.